Hi, John. Thank you very much for joining us today. How are things in Toronto?
Hey, thanks for having me. Appreciate it. Slowly getting back to normal in Toronto, and the financial district is definitely showing more signs of people returning to work, which is great.
That's good to hear. John, let's start with an update on the Sprott Physical Uranium Trust. When you and your team took it over in July of 2021, its net asset value was around $600 million and it held 18 million pounds of uranium. Where does it stand now?
Yeah, sure. So it's been an incredible journey in a very short period of time. The Uranium Trust right now has about 53 million pounds of U3O8, and we've added about 11.6 million pounds so far in 2022. So we continue to see good interest from investors around the world. We also crossed the $3 billion net asset value mark, which is a great milestone. But I think more importantly, it's important because as the fund has become bigger, it's attracted larger institutions to get involved in the trust. And one of the things we've realized over the last few months is that we talk to institutions around the world that are interested in uranium. They do their homework on the thesis, and then they want to express their view. And they find that there aren't a lot of options. You know, outside of Cameco and Kazatomprom, the two biggest producers, the market cap of many of these companies is still quite small, given a 9-year bear market that we've worked through. So as our trust gets bigger, it seems to be attracting a bigger range of institutions.
Yeah, I'm glad you brought that up because just last week, I believe it was last week, but Caxton, which is a large macro fund based out of New York, they managed approximately $4 billion in AUM. They recently filed that they purchased $250 million worth of SPUT. And so just along that same vein, are you getting a lot of calls from hedge funds and long-only funds about this product or family offices?
Yeah, absolutely. I would say that most of the interest we're seeing are actually from institutional investors and family offices. Yes, there is a growing number of individual retail investors that are interested in the trust, but the really big chunks of money that have come in have been from institutions right around the globe. Caxton is one that we've been in touch with for many months, and they've been slowly adding and building their position as they become more bullish. I think a lot of hedge funds and institutions starting in January became increasingly bullish as things around the world started, unfortunately, to crack. First in Kazakhstan with unrest, and then more recently with the invasion of Ukraine by Russia. It seems to be very global in interest, and we've been talking to funds all around North America, Europe, Asia, and this morning, for example, I got off a call with a couple of hedge funds in Brazil. So the interest is very global in nature.
And what about your typical generalist firms like Fidelity or Wellington or CapRe? Are you seeing interest from these types of funds?
Yeah, I would say it's more sporadic. I think the macro funds, the energy transition funds, they've been much more in tune with this whole broader theme of decarbonization, energy transition, and they've done their work on and research on the uranium space. So I would say we're still in the very early stages of broad adoption by generalist investors. So I think there's a lot, there's a really big opportunity here as interest grows. Obviously, with things happening in Ukraine, sanctions with Russia, it is bringing a lot of attention. Just yesterday, the Minister of Natural Resources for Canada was speaking about how Canada can help and meet the shortfall in uranium and other things like potash as the world moves away from Russian supply. So this is getting a lot of attention. In the last few days, I think the Wall Street Journal wrote 2 different articles about uranium and uranium mining. So when the big publications are talking about a topic, it's not too far behind that you get more and more inbounds.
And along that same point, Goldman Sachs just went bullish on uranium recently, and that's also going to create a lot of exposure and interest.
Yeah, for sure. I think as these research houses put out reports on different commodities, Because remember, many investors around the world have been hugely underinvested in commodities for the last 10 years. This supply disruption from COVID and more recently with Russia, Ukraine has really highlighted how susceptible a lot of these commodity supply chains are, how underinvested they've been for 10 years, and how it's now creating all kinds of disruptions. So I think investors are thinking very differently about commodities, not just uranium, but a whole slew of different commodities that, quite frankly, have been completely ignored and unloved for many years.
So let's move on and just talk about the ATM. This is one of the interesting features about this product, but where do you stand? How much cash have you raised year to date? And remind me again what the cap is.
Sure. So the shelf prospectus that we filed and then upsized in 2 subsequent times allows us to raise about $3.5 billion in the trust. I think we're somewhere around 1.5 billion through that. So we've got more room to run, and this is not a finite limit. Once we run out of that capacity, then we simply go to the regulator and reload another amount to the shelf prospectus. But we did just shy of 1 billion last year, and I think we're somewhere, I've lost track because it's been so busy, but we're probably approaching 500 million for 2022.
So let's move on and talk about the New York listing. Where do you stand there?
Yeah, so we've continued to go back and forth with the New York Stock Exchange on the filing. I do have an update call with them on Monday. So I'm hoping to get an update on where we are with that. There's clearly a number of things we're asking for exemption from the SEC with respect to some of the, the attributes of the trust, and that process is ongoing. And we hope we can get it over the line this year.
And did you lock up the symbol SPUT or SPUT?
It was taken, unfortunately.
So let's move on. North Shore, let's talk about it and provide the listeners with an update on what's happening here.
Yeah, so as I talked earlier, in terms of the investability of uranium as a whole, investors can buy vehicles that own physical uranium, or they can invest in the miners, everything from producers to developers to exploration companies. And so the North Shore Global Uranium Mining ETF trades on the New York Stock Exchange with the ticker URNM. We've made a proposal back in November to acquire that fund and reorganize it to become the Sprott Uranium Miners ETF, and that proposal requires 50% of all the shareholders of record on December 15th to vote their shares. And as you can imagine, there are a lot of investors in the fund, and it takes time to get people to pick up their phone or go to the website, put their control number in, and vote their proxy. So we are very, very close to achieving that 50% quorum. I think as of yesterday, we were at 46 point something percent. And we had some more shares come in this morning. So we're very close. So if a shareholder of record of December 15th owns shares and has not voted, please go to our Twitter feed. We have some 1-800 numbers there that you can call to do that. And but on the theme of investing in uranium equities, I think this is really interesting because we recently did a study and said, what's the market cap of all the uranium companies that we can find that are publicly listed? And there's about 80 of them, 83 of them. And the market cap is just over $30 billion US. So that you could essentially buy all 83 companies if you had $33 billion. Now, if you contrast that to, say, the market capitalization of Exxon alone as a single company is 10 times that amount. Let's go down the food chain in terms of another oil and gas company, EOG Resources. The market cap of that company is 2 times the 83 companies combined. So I use this as an illustration to highlight how small the investment universe is to other forms of energy production and generation. And this is a result of a 9-year bear market and many companies basically disappearing over time from the last cycle. So institutions are looking to get invested in this sector, and what they find is that it's still a very small size. That size is clearly going to grow because there's going to be much more capital going into the sector. There's way more investment and interest now with uranium at $58 than uranium at $28. So we see a lot of growth in those companies. We see a lot of projects finally coming back online in the years to come. And there's a lot of interest in the uranium equities as well.
You bring up a very good point because, as you said, the spot price is around $58, give or take, but yet we're nowhere near the all-time high of $140 that we saw back in, was it 07?
07, correct.
Right, so the level of interest that we saw back in 07 was significantly more than what it is right now, and yet the whole backdrop to investing in this space is so much better than it was back then. And so if I was to use a baseball analogy, what inning do you think we're in?
I think we're starting the second inning. Last year was kind of last year was the first inning, like literally getting out of the batter's box and getting out to the plate. So last year was a transformational year where you saw what we believe was the true price inflection in the spot market when we started to break away from $30 and then achieve $40 and so on. This year it's about building on that, and more importantly, I felt that 2022 was all about looking for signals from the term market. And what I mean there is, are we seeing contracts being done, more of them, bigger sizes, and at higher prices than we've historically seen? And I think so far in 2022, we're seeing all those signals. We're seeing more and more utilities go to the major producers and say, look, I need security of supply, not today, because that's not how the uranium market works, but I need security of supply starting in 2026 and going all the way out to 2032, for example. We're seeing, I think the best signal we've seen in the market so far is from Cameco, that announced in February that their contract book last year for the entire 2020-21 was 30 million pounds. And at that point in February, which was about the midway point, they'd already booked 40 million pounds. So that was the signal we've been waiting for and watching for. Are the utilities coming back and feeling anxious about security of price and supply? And for utilities, this security of supply issue has changed dramatically in the last 3-4 weeks, obviously, because with their dependence on Russia for enriched uranium, this really changes the whole dynamic for them. So whether there's sanctions or not, whether Russia withholds the material as a countermeasure, or whether an individual utility opts to self-sanction. And I've heard this from a number of utilities that said, we have deliveries coming from Russia, we are reneging on them. So this crunch that's coming in the enriched uranium is real, and it impacts the utilities greatly. How are they going to make up the shortfall? Well, they're going to look for enrichment facilities in France and the United States to make up the difference. But there isn't like a whole ton of capacity that's sitting there idle to make up the shortfall. And this capacity will be supported by Western facilities, but it's going to take time, and it's also going to take a lot more U3O8 and UF6 to facilitate that supply deficit, to meet that supply deficit coming from Russia. So we think this is another key factor that's going to play out in 2022.
Very interesting comments about the term market and what utilities are doing. Now, what about the spot market? I'm kind of curious, are the traders at WMC, are their phones ringing off the hook, or do they have to go looking for supply? Are people holding back on product?
Yeah, so I mean, we're such a material buyer of uranium that anybody that has uranium to sell generally has our phone number. So we find that we have to reach out to them less and less. But what we've noticed in the last few weeks is, as soon as there was chatter about Russian enrichment being sanctioned, and there was a bill put forward by a U.S. senator to do that recently, we noticed that as soon as there was concern about potential sanctions, the market became much tighter. People seemed more reluctant to sell their pounds because just the unknown of what could happen, what's the potential disruption. So we are finding the market to be a little thinner, and people a little bit more sensitive about letting their pounds go into the market, given there could be another supply disruption here on the enrichment side.
John, I want to digress from uranium just for a moment. Many of our followers and yours have an interest in gold, and the Sprott name is synonymous with precious metals. So I can't let you go without getting your thoughts on gold. And gold's only up 5% on the year versus uranium, which is up 30%. Yet inflation's trading at levels we haven't seen in decades. But when are we going to get a uranium-like move in gold?
Yeah, I mean, it's a very different market, and it's and then the reason for that is because there's a massive stockpile of gold sitting around in vaults around the world. So it doesn't have the same supply demand, fundamentals and supply chain that uranium has. But nonetheless, we know that when there is a run on gold or the high demand for gold, it can create dislocation in the marketplace and push the price up. So we've seen a big shift in our business in terms of interest in physical gold and physical silver so far in 2022. And last year was a fairly quiet and soft year for physical gold investments. If you look at all the big gold ETFs last year, most of them all had net outflows. The GLD was about minus 10 billion last year. So that's just a reflection of people, back to equities, back to tech stocks, back to risk on mode last year. That's clearly shifted this year, where many of these stocks have corrected pretty sizably, and people are thinking much more differently about their portfolio risk. So we've seen a lot of interest back in our gold and silver trusts. So we think it's starting. It feels like kind of inning one of the leg up.
So there's hope for us gold bugs.
There's always hope.
John, I want to thank you for spending time with us today. That was a very insightful conversation. And if we have any North Shore shareholders watching, please get out and vote your proxy. Once again, John, thank you.
Yeah, thanks for having me. Appreciate it.